Hi, Larry Berman here, and here's what's on my radar this week. Well, it's only geopolitics at this point. It's a somber day, September 11th, 2001, 20th anniversary. I've had this picture for years, well before on my wall. Well before 9/11. It was my dream to work on Wall Street when I was a lot younger, and I had the very good fortune to do that. Actually, my friend Phil, I worked right there. The plane hit right there, so Phil was one of the lucky ones. But David worked here, and wasn't. I think about. Geopolitics. I'm thinking about Afghanistan. This is the picture of the CIBC World Markets office that was kitty corner to the World Trade that day. And it's a tough time to kind of keep focused and think about capitalism at that. But I remember very distinctly at the time trying to give advice to clients on, what do you do? Markets are shut down for a week after 9/11, and it's not an easy time. So the memories are deep, and I think about geopolitics a lot. In fact, I think it was that day that really put me over the top, thinking about geopolitics and that the macro part of markets are very expensive. Not expensive, very, very important. But at the bottom line is the bottom line, and the micro is important too. So Friday afternoon here, just not an hour ago, a headline hits the tape on Apple and a lawsuit about the practices regarding how they charge in the App Store for things. So stocks trading down almost 3% right now, and I listened to some analyst comments, read a few things. This is unmistakably bad for the App Store in the short run, and a lot of uncertainty here. So what happens technically? Well, you get a correction to trend. Right now, the 200-day average for Apple is sitting in about 135 area, just below that. So probably the biggest stock in the world has a 10% correction in front of it. We were only at 135 back in June, so it's not breaking any trends or anything, but clearly some downside risk to a key stock like that. Seasonality patterns this time of year, all these things kind of get in the way here. So I think the markets are due for a correction. 5 to 10% range, and I'm holding to that for now. But the liquidity is the offset. What is the Fed going to do? We heard from the ECB this week, and basically they're not tapering, but they're tapering. Anyways, it's nonsensical in some part, but the market just seems to love the liquidity, and as long as we have more liquidity than less, the markets will be okay here. Biggest policy mistake going forward is them not providing enough liquidity, and that's blowing all kinds of bubbles. So the ending here is going to be, volatility is going to come back at some point. Trade of the week. Well, what do you do here? Still very negative on markets for a correction. So, be defensive, be hedged. What do I like here? I love uranium. URA, we talked about it a few weeks ago. We added to it back then. I'm trimming a little bit right now. It's getting very overbought. But when you look at a long-term chart like the one we're showing here and see where this potential could be, you see a big smile on the chart. I think uranium's got to be part of solving the green problem in the world as the Democrats in the US debate that. Have a great week, everyone.